All right. Let's have a conversation about framing a trade. Okay, so there's just certain things I have, a checklist, right? And we want this to be as mechanical as possible without being so restrictive that you never take a trade and then you end up trading whatever you feel like. Okay, so you need to learn to have flexibility in your trading. Yes, you want to follow a strict plan, but that plan really needs to be flexible because the market doesn't give us, like the same conditions over and over again. Some people may argue that, but what I have found is the more flexible I am, the better off it is, as long as my flexibility is not going against my foundation. So let's talk about the foundation of framing a trade. Okay. So I'm going to use this example up here. These are the intraday trades. This is Cheech's custom right here. I just used the 1 hour point of interest. Okay. Fair value gap, breaker block, high, low, things like that. I'm looking for a 15-minute draw and structure. So when I'm looking at the 15-minute, I'm considering structure and I'm considering where my draw of liquidity is. Now, I may have a draw of liquidity on the 1 hour POI on the point of interest, but I do consider the 15-minute draws just in case we're going to like clean out a lower time-based liquidity on the 15-minute chart. I want to be aware of that draw so that way I can manage my trade, move my stop loss, take profit, things like that, right? And then the 3 minute is usually where I look for my entry models. And this is where you'd find your unicorn model, S&D, all kinds of things like that, right? I really recommend you learn to be a little flexible with those, but without going outside of your rules. I hope I could explain this in this video, right? Okay, this is optional. I do manage my trades on the 15 second. I usually only hold trades for 15 minutes, maybe 20. All right. If I'm holding trades longer, it's going to be because the market looks like this. Okay, you see this like drop right here? Sure. I'm going to do my best to hold through that. And a lot of times I will use the 15 second and 3 minute to manage that to see how far I can hold it. Okay. The way I manage trades on the 15 second definitely helps me to, a lot of times I get those runners. Yes, I will take my profit and majority of profit, but I will get a hold of those runners. Now I'm going to go over this layout in a few minutes. I don't always run this layout, but when I first started getting serious about trading and actually becoming profitable, this is what I was doing. So a lot of times I make sure that my top-down analysis comes back to this layout, okay? So I'll go over that. Now, briefly, you see over here, you got your position trades, your swing trades, short-term trades, intraday trades, and scalping, okay? The only thing I want to say is I know a lot of you all are eyeballing the scalping. Scalping is extremely mentally fatiguing. If that's even how you say that, okay? You can really burn yourself out on scalping. So if you scalp, I recommend, picking sessions, mainly in the macros, okay? Macro time frames, which are these guys right here. Okay, you see the macros here. All right. So that's what I definitely recommend scalping macros. And don't do it too long. Okay, that's just my recommendation, especially when you start out. Pay attention to your mental fatigue. All right. Okay, off that soapbox. What just happened to my whiteboard? There it is. All right, we good. We good. Moving forward. All right. So I'm going to focus on the intraday trades. This is pretty much what I trade all the time. Okay. So I'm going to make this simple. There is a lot more going on in my trade plan that I'm going to share today. But this foundational, what I'm sharing here is what allowed me to move from to being profitable to actually making money. Okay. So let's go and talk about it. So the first thing was the 1 hour POI, right? So here you go. We are right here. So this is the 1 hour POI. All right. So let's take a look at this and let's take a look, right? So what I would do is I would have come in here. Let's say I was trading in here yesterday. Okay. Which I was, right? Here is a point of interest, POI, point of interest. Okay. That is a point of interest for me. I actually tried to long from right here. Didn't quite work out. Tiny loss. No big deal. Not a big deal. Ended up jumping in a short and doing very well and covered that loss threefold. Okay. So another thing I'll say, just because it's fresh on my mind, don't afraid to be wrong. Okay. I was wrong. I was trying to long this. Okay. I just confidently and just, technical TA analysis, whatever, I said, if we start to lose this, then I need to start paying attention for shorts, because where are we going? Where is the next point that we could go? Where is my next POI going to be? Okay. Looks like right here and here. I'm trying to do this on a tiny chart. Usually I will do a chart at a time, so I blow them up real big. Let's see. If this full sizes, there we go. Okay, this will be a little bit better. I'll do this for a minute. We are on the 1 hour chart right now. I've got my point of interest here, my point of interest here. Okay. Where else would I have a point of interest on this chart? Okay, look at this bad boy right here. Come on, there we go. Shift click that, bang. Okay, that was another point of interest. Where's maybe another point of interest? Seeing all these highs up here. This would have been a point of interest for me. I wouldn't have got very excited until we came all the way up. But the reason why this was a point of interest that I was just at least paying attention to and I was aware was on the chart was because of this bad boy right here. Okay. Excuse me. This would have been a nice place to short. So these are 1 hour fair value gaps right here. Okay. Those are my point of interests. These are points of liquidity. Okay. These are another point of interest. All right. So as I'm trading throughout the day, I want to keep this on my chart, right? I want to, excuse me, make sure that I, am aware of these points of interest. Where are we going today? Okay. Well, here's a point of interest right here. All right. I don't know if this is where we're going, but I'll tell you what, that'd be a target of mine. Where's another target? I know it's kind of a smaller pool of liquidity in my mind, but I would be paying attention to this right here. Okay. All right. So now I have points of interest on my chart. Now, before I frame a trade, guess what? I'm not going to move, and I'm not going to make a move until I'm at a point of interest. Okay. That right there will keep you out of so many bad trades. I can't express how many times I've been on the 3 minute, like, look at that. And then jump to the 15-second, enter a trade, start managing that trade on the 15-second. And, we were in no man's land. Okay. The only time I will trade no man's land is if I'm being very strategic and I have a very clear moving from this point of interest down to the next point of liquidity. And let's say I get into a shorter trade, like somewhere in here, and I'm still able to have a good enough risk to reward. Okay. That's the only time I'll push for that. All right. And usually if I do, it's a very light risk trade. Okay. So you would need to understand that this is a lower probability trade. To whatever. So if I miss the trade, I miss my perfect setup in my entry, sure, I may take a stab at it, but it's going to be a lot more controlled. It's going to be a lot less risk and so on, right? Okay, so that's the 1 hour. Okay, so now I've got these on my chart. So now I know I'm not trading. So right now, what could I be looking for? Well, if we're going to sweep this low that's way back here, right? What I would anticipate is a little bit of ranging right here, and then that we swoop down, we clear time-based liquidity into this inefficiency right here. And then what? Potentially put in a entry model, which I'm telling you, you could use the unicorn, you could use S&D, you could just use like fair value gaps, which a lot of times is what I use in breaker blocks. And the unicorn is a breaker and a fair value gap. So just something to be, pay attention to, keep your mind out, keep your eye out for. All right, let's keep going. Whew. Okay, so on the 15-minute here, right? So we got our 15-minute bad boy. Ooh, let's bring this up. So what I'm looking for in the 15-minute, this is where I start to really look at structure. Okay, this is where I'm paying attention to highs and lows, time-based liquidity, things like that. This is just my overall structure. Usually I come in here and I'm like, okay, previously I would have been looking at this. We would have hit that liquidity right here. I would have been considering a move. All right. We came down into this right here. Okay. So that's a sweep right there. We swept. We did start to move up, but we failed. And then as we retraced up close to it, we failed again. Okay. So this would have ended up being a short for me. All right. So another thing is on this chart, I would have also been considering this right here. Okay. So this time-based liquidity, gets swept. Boom! Big old manipulation wick, and then we fire off to the races, right? So this right here would have been a potential long setup right in here, and I just say potential because you never know. You need to follow your trade plan, right? And then you can ride that up perfectly to the top every single time. Just kidding. I shoot for a 1 to 2, and then sometimes depending on where I'm looking for fair value gaps, like right here, this would be an area I would be taking target. I'd be taking profit. All right. Okay. Hope this is going well. I know this is a lot of information, but this is really what I do in my head, and I'm trying to share, what I do in my head. So this is where I am paying attention to structure. Okay. Is on the 15-minute. I will use these time-based liquidities as well. All right. So now let's go ahead and drop down to the 3-minute. Let's get back into the charts. There we go. So 15-minute, I got them mocked. So now, all right. So now I've got high time frame POIs of areas that I'm showing interest, and then I have 15-minute structure. Okay. So once we hit our mark, right, on this chart over here, then I could drop to the 15-minute, start looking for, different structure change and things like that. Because if I look at the 15-minute right now, 1 hour looks bearish, 15-minute looks bearish, 15-second looks bullish. We just put in our first little tiny fair value gap. So am I going to trade on this fair value gap? No, sir. Definitely not. All right. But let's get to the 3-minute here. The 3-minute is where I live and breathe. You could put the 5-minute on your chart. Totally fine. 3 to 5 minute, whatever you feel like. I just wanted a bigger picture than the 1 minute, but I didn't want the larger picture of the 5. I'm weird. Okay. Whatever works for you, try them both. All right. So now what would I be looking for? Okay. Let's just say we swept this here where we're in my point of interest, right? 15 minutes still looks kind of meh. All right. But I'm going to be paying attention to fair value gaps on the 15-minute. I'm going to be looking at structure on the 15-minute to see what potentially we could be drawing back towards. Okay. Things like that. So this is like potential roadblocks or, potential short-term draw on liquidities. Okay. So on the 3-minute, what am I waiting for? I am definitely waiting for market structure change. I am waiting for a change in the state of delivery. I'll go over that a little bit more detailed in another video. But I am looking for, right now we're just tanking. Okay. Why am I just going to long this little candle right here? I'm definitely not, right? But we're in a point of interest. Okay. Now, here's the thing I want to say about this point of interest that you're looking at, this white line that we just swept. Okay. What I want to say is what's right under it. It's another point of interest. Okay. This could be the absolute draw on liquidity. Okay. This is an imbalance in the market that it may need to pull back to. All right. So if I take a long here, I'm going to be a lot more cautious because I realize we could come up a little and then just go straight down in here. Another thing we could do, which happens a lot, okay? Another thing we could do would be to range right here for a little while, okay? And what's that range going to build? It's going to build liquidity, okay? So what's going to happen after the liquidity gets built? What are the market makers potentially going to do after it sits here and ranges for a little while, right? Oop, well, that was a terrible. It's going to sweep down into this point of interest. And then what? Then we're going to start seeing the true move back up to other points. Wow, I got to fix this. Can't stand it. Here, let's just do that. Look at there. Ah, looks perfect. All right. So, how many times did we come down to a point of interest, right? You guys take a long, and I've taken a long. And then all of a sudden, here's a little sweep of liquidity. But then we come up and then we sweep all the way down. But where do we go? We go into the next point of interest because it's really close. Why wouldn't they? If they, meaning market makers and smart money, right? Bigger institutional traders, they can't fill millions of dollars in trades right here. Okay. All right. They could slowly accumulate, but as they do, they're going to get big pushes in the market and they're going to get terrible fills. So what do? They move the price around right here. Get everybody to what? Long and short, long and short. They'll take the shorts, okay, swoop down, sell the shorts, get the longs, boom, 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 okay, and then they ride the actual move up, all right? So when we stop at the first point of interest and there's one this close, either I won't trade or I'm just very picky. All right. So now let's drop to this 3-minute. This is where I'm going to be framing my trade. Okay. All right. Let's say I have, I understand my potential draw on liquidity on the 15-minute, right? I use it as a roadmap of where we're going to go, where we're going to stop, what's going to be in the way, what's the shorter term draw, time frame draw on liquidity. And then I'm going to use the 1 hour as point of interest and then the larger time frame draw on liquidity. Okay. So for us to get like all the way back up here, okay, on this, I'm going to need a pretty good solid like draw, and actually draw on liquidity coming back up. I would be looking at this fair value gap up here for sure, right? So maybe we come down, we sweep this, and then we pull back up here. All right, I would definitely be taking profit here, but I would also be taking profit at the top of this range as well, okay? Because maybe we just swoop, you know, take some shorts, you know, they buy all these shorts and longs right here, and then they just pull the market down, boom, okay? So I do take profit at the other end of the range as well, all right? So, sorry about that, just keep going. 3-minute, okay? This is where I'm gonna start framing my trade. So what I'm gonna do is I look like I might have to actually frame this in the opposite direction because that's what the market's showing right now, okay? So let's just talk about it, okay? Let's say I was ready to be short and I'm looking and everything agrees. The 15-minute, the 1 hour, we're at a point of interest, okay? And this is hypothetical, okay? I'm just giving a live example here of like sitting on the charts. All right, so here's my entry, okay? What I'm looking for is I'm looking for a push and displacement in my direction, okay? And then I am looking for a pullback into what? An imbalance. And then that's where I want to get short, okay? And let's be realistic, right? Let's drop the short like right there, okay? You didn't grab it at the top, you didn't grab it at the bottom, all right? So what I would do is I would go to the top of this body candle right here or the wick, whichever one. The wick is safer. The body right here is the candle body top. A lot of times I use those. And I'm just going to pull down, okay? So I would be looking for somewhere around a 1 to 2, all right? And then I would also be pulling back. Now we're in like a knife dive right now, so there's nothing over here. But if there was time-based liquidity or any kind of liquidity over here, I would be looking to take profits at zones, right? I'd have targets. All right. So that's what I would be doing, right? So let's say we got short here. Now, to manage the trade, let's go big on the 15-second, right? So here it was. Okay. So that trade was right here, okay? It's about there. All right. So what I would do on the 15-second, okay, is I would come into the 15-second and I would be looking to take a short, right? Let's just say, you know what? Let's just say we took it right here, okay? This is seriously hypothetical, but this is honestly what I do in real life, okay? Truly is. Let's just say the stop loss is here, and let's go ahead and drop this down there. So the stop loss probably realistically was up here, and so let's just talk about that. All right, so what we got going on here is enter the trade, right? We get a nice little push, and then we come up, and then we kind of sweep this local liquidity, and then we start to push down. All right, so here we go. So here's the trade, and what I'm going to start paying attention to as we go and manage my trade is, and some people agree, some people won't. Okay, this is personal preference, okay? One, you walk away and you just let your trade play out. You're going to pick your draw. Let's just say my draw was this right here, okay? And I'm like, I will not take profit until I hit that draw on liquidity. And if I get stopped out after it moves in my favor, then that's what you're going to do. So what you need to do is test it and figure out which plan works for your style of trading, okay? All right, I have a problem losing. So I know that I get upset if I lose. It's a flaw of mine. It's something I work on. So what I do within my plan and things that I've looked at, I do trail my stops, right? And I keep it going. All right. So, all right. One, As we get this giant displacement and we start pushing down right here, okay, I can just guarantee you, knowing myself, boop, I'm going to push that thing to break even. I think I got to move it up just a little bit. Get out of here. To grab the box, the little box. Oh, you almost had it. Okay, there we go. All right. Okay, I got to pull it above this little wick right here. Just so, there we go. Okay. So I would move my stop to break even. Okay. As soon as we come down and I'm at a 2-to-1, right, which stop loss was up here. Okay. So as I get to a 2-to-1, all right, I'm just telling you, I know my behavior. Okay. I've mapped my behavior. I work with a like trading counselor, good friend of mine, and we talk and we journal my trades and we discuss things. Okay, so what's going to happen is right here I'm going to take profit, probably most likely like at least half to 75%. Okay, depending on the trade, depending on how far the draw is. Okay, with this big of a displacement, maybe I decide to hold, right, to see if we go ahead and ram into this right here. And then I would take probably 90% and maybe leave a little bit, maybe like 3 micros or something left. Usually I enter between 10 to 20 micros. So maybe I leave 5 in, 3 in, but I take most. All right. The reason why is anything over a 2-to-1 for me, like 2 to 2.6, it's pretty good. Okay. Plus it's hitting my target. All right. Really hope this is helping. I'm trying to share everything that's inside of my brain. All right. So from here, as we close, right, this as I close 2-to-1, but I have some runners left, I'm going to pull that stop down. Okay. I'm going to leave it up just a little bit. All right. So now what am I going to do? Okay. I'm looking at what? I'm looking at market structure that's being built. What do we have right here? What is that? That's a fair value gap. Okay. It's kind of not really one there. Okay. There's an itty bitty tiny one right here. Okay. I would probably at least make a note of this. I'm going to put it on the chart. Usually I wouldn't bother. I would just make a mental note. But let's go ahead. I don't know if I can grab it. So there's a little fair value gap right there. Okay. So I would just make note of that. All right. So what am I going to do now? Okay. What I'm going to do now is I'm going to move my stop loss and whatever's left. Boom. Okay. My stop loss is going to be right above the fair value gaps. All right. Now, since I have more writing on the trade, whatever's left, right? Let's just say 5 micros. Okay. I'll start managing the 5 micros in the same way. Okay. I'm going to see how far I can take them. All right. So what's going to happen? We came right up here. Where did we come to? Right back to this fair value gap. Keep my stop loss a little above that. Well, what did we do? We came down, we created more. Okay. And there's also some right here. All right. But what I'm doing is I'm not moving my stop loss until this gets hit. Okay. So I know that there's fair value gaps right here and right here, but I've ignored those. Okay. The reason why is because this is my stop right here. So if the market comes all the way back up, if it goes through, I'm stopped out. Okay. If it rejects, fantastic. Okay. Now we've rejected. All right. And we rejected hard and we pushed. So what am I looking for on these 5 micros that are left? I'm looking for the next fair value gap. Usually I like these big ones, right? There's a nice big fair value gap right here. Here, let me borrow this fair value gap marker right here. There we go. Look at that. Okay. Took it from my old one, moved it there. So what am I going to do now? Okay. I'm going to take my trade that's running, right? That's left in the trade, and I'm going to do this. Okay. Where am I going to put my stops? A little bit above where the fair value gap is created. Usually I give just a tiny bit of room. Okay. What does ICT say? Candle bodies tell the story. Wicks do the damage. Okay. That's just something I learned from his videos. I think it's smart. So I would move it up here. It would be there. And then now what? It's running. Right? Okay. So when I start to enter a, like a 1 to 3, 1 to 4 range, I'll start sniping, right? I get big pushes and I'm like, sell one. Comes down again, boom, pushes again, sell one. Okay. So now I've locked in a little profit here, a little profit here. This is how I manage my trades. Okay. It's not a mechanical system minus moving the fair value gaps. Okay. Other than that, there is a lot of feel. There's a lot of intuition. It just takes practice. I try to have fun with this. So that way it's not stressful. Okay. So what do? We push away from this fair value gap really hard. We push down and we created more big fair value gaps, okay? So here's my options. As we're pushing more into profit, right? So we had a range kind of right here. We pushed away from it, created a range here. We came back, hit some stuff. We pushed away again. So now we're creating a new range down here. Okay, so this is where, you just make the decision like, okay, so fair value gap, there's one right here. I know this is sloppy, but you know what? It's okay. There you go. There's the fair value gap. So what am I going to do now? I can just guarantee even more profit, right? Put myself in the trade right there. Well, this is me managing a trade, okay? Put my stop loss. I do usually give a little bit extra. Okay, you see there's another little fair value gap right here. Let me get this in a little bit. There's another little fair value gap right here, okay? So what am I going to do? I'm probably going to put that right above there on the candle body. Boom, there you go, okay? So where did I enter? I entered way up here. So if I get stopped out down here, which is like a 1 to 2.6 roughly, right? Fantastic. Like I'm starting to guarantee. Well, the good news about this is if we just start knife dropping, right? I can just like sell one, right? Keep going, sell one, all right? And that's what happens, right? That's how I'm able to get some of these bigger moves, right? When I sell here, okay, here's great example, okay? And this is just a hypothetical example, all right, yet again. Let's just say I sold, what was I just looking at? Oh yeah, right here on this peak, right? We entered back into some fair value gap, stop above the high, targeting what, right? All right, let's scoot in a little bit. Here, hold on, let me manage this a little bit better. There we go, okay. Came up the fair value gaps, came down, boom, came up here. I entered on these wicks right here because I'm very fast clicker, all 20 contracts, boom, 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 All right, I'm being a little silly, but let's just say we entered, a little more realistically, like right there. Okay, stop above the fair value gaps that were created right here. This is a little sloppy. I bet you this is off market time. I'm just doing an example. Okay, so what am I going to target on this trade? What I'm going to target is like this right here, okay? So how do I get any of this? Okay, how I get any of this right here, okay, is by taking some profits here, right? And then I start doing my trailing stop loss based on fair value gaps, and I keep it going down and down and down. And then I probably would have been stopped out on one of these highs up here, okay? And I would have had a couple of little contract pieces left, okay? And let's just see what that would have been on those pieces, okay? So anything I could have sold down here on a knife drop could have been, 1 to 6, right? Let's say I sold 2 contracts down here out of 20. It's still a little bit of a boost, okay? And let's say after we initially take profit here, we push down, let's say I sold one there, and we come down, let's say, because usually when we start knife dropping like hard, I kind of wait for those drops, and then I like, boom, I'll sell one. Then boom, I'll sell one, okay? If I'm expecting a bigger drop based on a bigger time frame draw liquidity that I think we're going for, maybe I only sell 10 here, okay? Maybe I'm only selling 10 contracts here out of the 20, and now I've got 10 as we come down, boom, sell one, boom, sell one. That's just what I do, okay? So that's how I manage on the 15-second. I really hope that wasn't too much. I really hope that was helpful. And let's just kind of go back and let's do an overview of this, okay? Because I really want this to be simple. And then, honestly, like once you lock in a trade and you're managing on the 15-second, just take a deep breath. Because if you mess up managing your trade, I mean, as long as you're not putting your stop loss in no man's land where you can lose money, you need to close it in and tighten it up, then you're good, right? That's where you can actually enjoy trading, in my opinion. All right. So you've got the 1 hour. Let's just look at the 1 hour again real fast. Okay. You got major points of interest. Okay. I don't want to start framing trades until I am in one of these points of interest. Okay. Fair value gap, liquidity, fair value gap, liquidity, fair value gap. Now this is just a baby liquidity, but it is still something I'd pay attention to. This right here also would have been something I would pay attention to, okay? These are just points of interest. Okay. I really like to favor the fair value gaps if you haven't noticed yet. It's just simple. It's an inefficiency, and it's really where the algorithm should run to. All right. So that's the 1 hour, 15-minute. 15-minute, I just keep in my head, right? Because the 15-minute kind of gives me my current direction. It keeps me from being so sucked into the 15-second that I'm not looking at the 15-second trying to long like crazy. And I'm like, we're like, this is like no man's land shorts. If I'm trying to hunt longs, yeah, might need to slap myself a little bit and be like, what are you doing, bro? So the 15-minute is my barometer, okay? It's my compass. It's what keeps me focused on where I need to be focused, okay? Same thing. Fair value gaps, points of liquidity. I know I didn't mark any fair value gaps on this chart. I definitely would be, okay? I would be paying attention to this fair value gap, like right here, okay? I'd be paying attention to, that's a baby fair value gap right there, but I'd still pay attention. Here's another one right here. I'd pay attention to that. The other thing I'd also be paying attention to, you know, is looking at, and I hope I'm not going to throw you a curveball, is like this points of liquidity right here, right? Okay. So as we just slide down like this, you know, there could be a lot of liquidity right here. A lot of people shorting, and where they put their stop losses right above. Okay. So we might get, you know, potentially a swing back, boom. Okay. And knock those out and then keep going. All right. But that's just an example. Okay. So 15-minute barometer. All right. So let's go ahead and drop back to the 3. I know that's a little bit more fresh and we spent a lot of time on it. This is where I'm going to frame my entry. Okay. Yet again, I know I played on the 15-second on the video in this video for that for a while, but seriously, don't go there. Manage your trades in the 15-second. Sure, no problem. If you have a hard time on the 15-second or you have free trading view, just use the 1 minute. Okay. The 1 minute's not going to be that much off. You're still going to see a lot of the same fair value gaps. I just like the 15-second. I think it's cool. It moves fast. All right. It's fun for me. And at that point, I've locked in my trade. I don't trade off the 15-second. I may enter off the 15-second, but only if the 3-minute has given me my actual model. And then maybe I wait for a return to a 15-second fair value gap, knowing I'm going to enter. The problem with that is you need to zoom out to your 3-minute to look at where your stop loss is going to go, to look at where your take profits are and things like that. All right. Okay. All right. So like I said, woo, get out of here. 3-minute. A 3-minute, we need to frame our trades. This is where your entry models go, your unicorns, your whatever. Okay. All right, and then the 15-second, I went over that. If you need to rewind it, go over it. I know it was a lot. This is going to be a longer video. I don't know if I'm going to cut this up or not, but we'll see. I tried to keep them short, but that's pretty much like how I think, how I manage trades, how I enter trades, how I try to get a, you know, bigger, R&R, you know, letting stuff run and things like that. So I hope this video was helpful. The last thing I want to go over is these time frames down here. Okay, so the same thing I did on the 1 hour, you would do on the monthly. The same thing I did on the 15-minute, you would do on the weekly. The same thing I did on the 3-minute, you do on the daily. Those are position trades. That's maybe something you'd hold for 6 months to a year, maybe even longer. Okay, swing trades, short term. Okay, all these times, time is fractal. You can use any time frames you want. Last thing I'm going to say is the caveat about the scalping. Be aware of the mental fatigue. And I'm not just saying that for myself. I'm saying it from people I know who are professional level traders who make me look bad. Okay. And they say that they're very cautious how much they scalp. All right. Because usually scalping has a lot of dopamine hits and you get excited and then you get burned. Okay. I recommend the intraday trades, the 1 hour, 15-minute, 5-minute / 3-minute, whatever you want. That's kind of where you need to spend your time. You know, maybe you do the 5-minute instead you manage a trade on the 1 minute. All right. I hope this video was helpful again. Sorry it was so long. It's just a lot of really good information and it's a good breakdown of how I live and breathe on the charts. So, all right, we'll see you in the next video.